wasn't it? I was very impressed with that. You could come back and do that all again at our Techno conference if you want to. I think the 7th of September, no, 7th of November. No, thanks, Jackson. The peanut gallery at the back, fabulous. Just double checking. No, he's right, 7th of November. You can come back and have some more great food and listen to some more great companies with us. We have got 13 presentations and we are rounding out the afternoon with the fabulous Eddie Rigg from Argonaut, who will have some very sage words of analysis and advice for us. Always worth staying for that one. And of course, we've got some drinks afterwards too, non-alcoholic and alcoholic. So if you're an absolute wowser like me, you can sit on the spring water and the lemonade, and the rest of you can drink your weight in beer if you would like. Right, were there anyone have any tips or any points that they want to share with us at this point in time? Roma, anything? No, come on, you're part of a big consortium. You and the boys must have talked about something during the break. What did you like? I know you guys. So these guys over here, they've got, some of us have book clubs, some of us have wine clubs. They've got a little make money club and they all get together and they've got a special lunches, don't you? Who did you like so far?
Them to present.
Pointing's very rude. I don't know about you people in Victoria, but in Western Australia, we don't point, Roman.
Zara, that's who I'm waiting for.
Ah, Asra, okay. Okay. Well, we'll see what the big man has to talk to. We had someone yesterday made comment. I said, who was one of their favourite presenters during the day? And they actually mentioned this man. And I said, why was that? Because he doesn't have an engineering background. He doesn't have a geology background. He's actually a lawyer. And they said, well, lawyers are pretty smart people. And if he's that smart to get on board with this project, there must be something in it. So that was their reasoning. So it'd be interesting to see what they're going to come up with. Let's get the show on the road for our second part today. And we're going to start off with the tall man. Mr. Gale, where are you? Where's Christopher Gale? There he is in the middle. So we're talking Latin Resources to start off this session. And Latin Resources is an Australian-based minerals exploration company. They have projects in South America as well as here in Australia. And they're focused on their flagship Salinas Lithium project in Brazil, where the company has its maiden resources drilling definition campaign underway as we speak. This is Chris Gale. He is their managing director. And would you please make him very welcome?
Thanks, Christy. And what a great song. I remember dancing that song down at Silvers in South Yarra, that song that was on, the Earth, Wind and Fire song.
Oh, did you sing?
No, that song that they presented. That was a fantastic song. Didn't you used to dance to that one or not? Thanks for everyone attending today. It's great to be in Melbourne, week of the finals. I'm an Essendon supporter, so I'm really not looking forward. Who cares about Geelong and Sydney? But good luck to both sides. I think if any side can beat Geelong, it'll be Sydney. We'll see Saturday night. Part of this presentation is about, I'm sure everyone in here has heard the word lithium. It's obviously the metal of the day, metal of the month, but rightly so. I think this slide says it all for me. We put this slide together about a month ago for our roadshow. We're running now through Perth, Melbourne and Sydney and Singapore next week. In 1900, 88% of car ownership went to 8% of car ownership went to 80% within 10 years, 13 years. So the horse and cart got killed. The combustion engine came in, and the rest was history. In actual fact, someone asked me the other day, I was in an analyst meeting the other day about why Ford and why have these other car manufacturers, these OEM buying raw materials. Has it ever happened before? In actual fact, Henry Ford couldn't get enough rubber for his tyres on his combustion engines, so he started building rubber plantations, or buying rubber plantations, and so he could source the rubber. One of those was actually in Brazil, where we're operating. 3 or 4 years ago, people weren't too sure about lithium, battery metals, copper, nickel, whether it was real. It was a concept. The concept is now over. This is real. By 20, 30, 50% of the vehicles in this town will be electric or hybrid. So the concept idea is finished. This is happening. 17% of European cars are now all electric, 15% in Britain, and Australia's 2%. We don't offer tax incentives here. Our fast charging stations infrastructure hasn't been set up, but it will happen eventually. I suppose the other thing which we all keep hearing is this lithium market deficit. There's certainly copper, nickels is going to have a massive deficit, but the mineral that's going to have the biggest deficit, and this is put out by the International Environment Agency, the Sustainable Development Scenario to get to net zero needs electric vehicles. It needs lots of other things, but in particular, it needs lithium vehicles. And one of the things that we're seeing is that the battery of choice is lithium ion, which obviously has lithium, copper, nickel, iron within that battery, but more importantly, lithium hydroxide. And the one thing that we do know is that lithium hydroxide, the most viable raw material to feed lithium hydroxide offers longer battery life, fundamentally. Lots of other things, but longer battery life. And what we find, and what the analysts have proven, is that spodumene, not lithium carbonate, spodumene is the right material to feed. It's about 17 to 20% cheaper to put spodumene into produce lithium hydroxide than any other material. So lithium spodumene is the preferred material, for the preferred chemical, for the preferred battery. Very important. Lithium prices set an all-time high again last night, 71,000 tonnes of lithium carbonate, and Ken Brisbane's, oh sorry, it's not Ken anymore, it's Pilbara Minerals auction got $7,100 for a tonne of spodumene, the highest it's ever been. So lithium, Goldman Sachs, good luck. Is any Goldman Sachs guys in here? No? Okay. Latin Resources, we've been operating in South America for 14 years. It's a great country to operate. Chile is the largest copper producer in the world. Peru's number 2 copper producer in the world. We have a copper asset in Peru. We're the largest shareholder of a company called Solace Minerals. We also have copper assets in Peru. We have a joint venture, our lithium project in Argentina, and our flagship project, which we're totally focused on, is in Brazil, which is our Salinas lithium project. Brazil, as a mining jurisdiction, is one of the best in the world. It's the 8th largest economy in the world. We're in a province called Minas Gerais. Minas Gerais is one of the largest iron ore producers in the world, with Vale being the leading company there. Over 65% of Brazil's electricity comes from hydro. So we talk about sustainable mining. Our plant will be fed by hydroelectricity, which we're working with our ESG policy along with sustainability on a mining scale. And it's also it's a lot cheaper than what we're seeing here in Australia. I pay a top-class Brazilian geologist, and he's blessed that he's getting $70,000 US a year, compared to triple that here in Australia. Our mining operating costs are going to be low, and so we're very lucky to be in a great mining jurisdiction. In 2017, we went out and we actually started exploring Argentina. And then once we hit Argentina, someone sent me the Sigma presentation. I then went and sent our guys from Argentina. We took 9 months to walk from Sigma up to our discovery in Salinas. And Sigma, by the way, is a $3.6 billion company. And that they've put Brazil on the map for spodumene, lithium spodumene. So we hope to follow in their shoes in the next couple of years, and we've certainly started the journey. We actually put our first hole down. COVID hit us pretty hard. We had to pull the guys out of Brazil. We got back on the ground late last year, put our first hole down in February of this year and had a great hole. And we've since started our resource drilling definition. Our first JORC and third maiden JORC resource will be announced in December. We're now at about 9,500 metres. We've finished off our first pass drilling, which will give us our third resource, and we'll start our infield drilling in the next few weeks. This not only, a lot of people ask, well, how big is this deposit going to be? I can't actually answer that yet. But this is the focus we've got with our 25,000 meters. As a lot of you know, we put a hole down here, hole 33. We hit another group of pegmatites with spodumene, 20% content of spodumene, same geology. So we'll grow this resource out of here. So once you see that JORC inferred resource, that will increase as we continue to drill out here, very important. And we haven't tested the depth yet. This opens up to the south, opens up to the west. So watch this resource grow over the next 12 months. Salinas South, we've got a field team out there again, just identifying some drill targets. We'll put a scout drill down there probably early next year. Our focus is on Kenobi Project, complete a prospect, but once again, more ground that will grow this resource. We finished our first pass metallurgical work a couple of weeks ago. As my General Manager Geology at State, outstanding results, 78% recovery, concentrated 65.5%. I question anyone to go out and look for better recovery rates on this. This material is very coarse, which is what everyone wants, very low mica, very low iron. So this is coming out of the labs beautifully at the moment. This means that we more than likely won't need a bit of flotation circuit. So our CapEx is going to be a lot lower than what we're seeing up here in the Pilbara. Pilbara most of those plants have flotation. We won't need that. It'll be pure DMS for us. A little bit on Argentina. As I said earlier, 2017, we drilled this project, come up with some great grades. We're going back into that project. We've just got approval for that. We'll go back into that project next month and start our exploration. Once again, more exploration upside. These are not thicker, bigger pegmatites than Ancaster, so we're looking forward to heading out there as well. Now, final couple of slides is about where are we going to sell this material. China has most of the processing power for carbonate, hydroxide, Korea, Japan. Most of those batteries are manufactured certainly in China. But watch North America over the next 10 years. They are building massive processing power, 13 gigafactories over the next 10 years, next 5 years. They need lithium hydroxide to feed those gigafactories. We know that Tesla's building one in Nevada. Albemarle announced starting to build on their one in North Carolina, but there'll be another 3 to 4 follow. So remember what I said earlier, spodumene will feed these lithium hydroxide plants. This won't be sent to China. Our view is that we'll be sending our material direct into North America, feeding those lithium hydroxide plants and that new processing power that's been developed in North America. The great thing about Brazil versus Australia, which is the largest spodumene metal producers, is it's a third the distance of travel. And it's not so much the freight or the shipping costs, it's more around this carbon footprint, this sustainability of mining. Very, very important for companies like Tesla, Ford, GM, that they have this low carbon footprint. So this is, it's really proving up to us that we're going to have a great project in a great location feeding one of the largest economy in the world. So just a little bit on our timeline now. JORC mineral resources I mentioned earlier, we'll have that completed by December. That will see, I think, a re-rating of our valuation at the moment. We're working through our PEA. SGS have been appointed on our feasibility studies. SGS did all the Sigma's work on their feasibility studies, the design of the plant. We're actually using the same consultants that actually designed and are building Sigma's plant. So we're not reinventing the wheel here. Metallurgical test work will continue. We'll build a pilot plant to start producing concentrate. Our DFS is planned to be completed by December the next year, and then we'll start looking at developing, building a project in 2024. Very fast timeline, but very, very important that we meet those targets. We will meet those targets, and everything's looking great from that perspective once that DFS is completed. A little bit on the corporate side of the company, market cap around 200 odd million. We have $30 million in the bank. We've got another $3 million coming in options in December. You know, we have very, very good liquidity in our company, very good liquidity, and one of the highest traded stocks in ASX. In actual fact, 3 times last year, we were the highest trading stock in ASX. So really exciting times ahead for the company. A lot of people have done well out of Latin, but there's a long way to go yet. So thanks very much for your time. Appreciate it.
Well done, Christopher. Great talk. So who are you backing?
I can't say Essendon Football Club, but
It's not that.
going for Sydney. Sydney, yeah.
And what sways you that way?
I think they'll scrag, they'll drag, they'll smash Geelong. Geelong won't be able to play. Well, that's what they do.
Barry's not playing for them anymore, though.
No, well, what will happen is I think they'll shut Geelong down. Geelong are a beautiful football side, playing best football of all clubs this year. But I just think Sydney will get over the line. We'll see what happens. What do you think, Chrissy?
I said Swans, but my reasoning was completely ridiculous. But yours, you sound like you've considered yours a little bit more.
Well, I watched Sydney against Collingwood on the weekend, and they're just amazing, aren't they? Yeah, great.
There's a lot of yelling in our house. Good on you. Thanks so much. Thank you for coming up and presenting to us. I really wish Roy and HG were doing a bit of commentary on the weekend. I think that would have been absolutely brilliant. Right, Roman, your wish and your dreams are about to come true for you and your group. You're about to hear the man whom is your oracle, I believe. Let's see if the rest of us think it. This is Asra. Asra Minerals next on the stage. They started off, believe it or not, as gold explorers, but an unexpected recent discovery, literally on the tips of their toes in some respects, has turned them into rare earths explorers. Will it become their main focus? Leading us through the state of play of Asra's projects, would you please welcome up to the stage today the man responsible for corporate governance and the day-to-day management of Asra, Executive Chair, Mr. Paul Summers. Please make him welcome.
Thank you. Thank you. Well, very exciting times for Asra, and I really appreciate you coming here to listen to this presentation. As you'll see, we've got on the presentation rarest of the rare, and I want to tell you why we are the rarest of the rare. We're a 100% owned project in Western Australia, just north of Leonora. Very, very safe, well-known area, lots of access to infrastructure. It's quite unique, and one of the unique things about Asra and its rare earths project is that we own the pastoral station the ground's on. We've got access pretty well to unlimited water. We sit on the Tamil or aquifer, very large water resource. We've got access to an experienced mining workforce and infrastructure. We've got a lot of our own infrastructure. We've got accommodation on the station. We've got heavy machinery on the station, and in the Leonora township, there are a lot of companies establishing themselves to service the mining industry. If you're wondering where it is location-wise, we're basically next to Red 5's King of the Hills project. Our ground abuts theirs. Okay, so what's special about Mount Sterling's, Asra's Mount Sterling rare earths discovery? All right, so what is really unique is that we have the highest of ratios of rare heavies to light heavy rare earths. So that's extremely unusual, and there is only one other company in this country that we know of, which is Northern Minerals with their Browns Range project, that has that similar ratio. The big difference for us, though, is that we're not in hard rock. So we're in a regular structure just below surface. And what we have found from our assaying is that we've got the 5 most critical rare earths. We've got dysprosium, terbium, europium, neodymium, and yttrium. An amazing find. But the big thing that makes us unique as well, and from a production point of view, makes our costs of production inexpensive, or much less than those that are in ionic clays and hard rock, is that we have virtually no traces of uranium and thorium. And that also makes this discovery quite unique, because without uranium, it would have been very difficult to find because it sits just below surface. It was just that we came across an unusual outcrop, and from that, we find ourselves today with this amazing discovery. So how big is this? Well, currently, due to the amount of drilling we've done to date, we know that we've got a strike of 5.4 kilometres by 1.3 kilometres, very large. We've got indications now of over 7 kilometres of strike length, and what we have is continuous. We will continue drilling and we'll continue to discover how large this really is. It's very, very unique for the area. But aside from the rare earths, they don't sit alone. We also have scandium, cobalt, gold, and nickel. The scandium is really quite impressive, one of the largest discoveries we've come across. Now, for those that don't know what scandium is, it's an unusual element. Sometimes it's considered a rare earth, but it sits on the side of the periodic scale. It's been traditionally used in weaponry and aircraft, but there are many more doors opening up as more and more discoveries of scandium are being found. There is quite a lot of interest with scandium in relation to fuel cells, hydrogen fuel cells, and hydrogen fuel containers for transport. So I really don't want to go through our drilling results to date. They're available on our website if anybody wants to delve into them. But I will tell you that at our Ytria deposit, which is one of the two deposits, main deposits that we have at Mount Sterling, the highest we've received is 2,328 parts per million of total rare earths, and in scandium, the highest is 161 parts per million. Now, grade is often talked about with rare earths, and it's extremely important to have high grade when you're involved in hard rock or ionic clays. We're not in such an occurrence. We don't have that imposition. So our cutoff grade is estimated currently to be around 200 parts per million. So the economics of recovery bode very, very well for Asra. So I'll give you a bit of a shot of what our structure looks like out there, because it's very interesting and it's internationally unique. So you have the surface crust there of the regolith, and then below you have a blanket of cobalt and scandium. Now that cobalt and scandium, both above and below, is continuous. It's homogeneous and it continues so far for the full 5.5 kilometres by 1.5 kilometres that we have. And then in the middle, as you see, that green belt is our rare earth elements, and that is also continuous and continues through the full 5.5 by 1.5 kilometres. Then we have the sap rock, and under the sap rock, we believe we have now identified the primary source. One of our consultants is here today. I'd be very happy to talk to those technically minded about why we believe that. It is very unique. I'm informed that this is the only structure like this that exists known in the world today. Okay, so the big thing is processing. As I said, grade for us is not so important because of our low cutoff grade. So what we believe is this will be a relatively cheap exercise. We have now commenced metallurgy, which is very advanced for a project like this. Initial indications are that it will be leachable. We are getting leachable results, and we are very, very positive about what we've seen today. So cost of production will be minimal. So the other thing that makes the cost of production minimal and also makes us unique is that it's already occurred. The weathering has already broken down what initially was a hard rock material. So it's now, what we basically have is a supergene enriched from surface occurrence, which from recovery is going to be hugely beneficial. And we believe that we'll be able to recover at a minimal cost. The other thing is, for those that are technically minded and the geos amongst us, is that our rare earths are associated with manganese oxides, and that association also reduces the cost of extraction, taking us away from those hard rock and ionic clay deposits. So who's behind the team? Well, at the moment, we've got the eminent Professor Ken Collison, who we're lucky enough to have here today. And if anybody wants to have a chat to him, please feel free to do so. He's got a very, very long history in rare earths and is probably one of the most experienced in this country. And we're very lucky to have him. Ken approached us actually when we made our first announcement. And I remember the statement before I knew Ken on the phone to me. He said, "Do you guys really understand what you've got? It is really amazing. I know of no other occurrence like this in the world." And he still stands by that. We've got Gavin Beer, who's our metallurgist, and Gavin's working actively currently on our metallurgy. Then Matthew Longworth, one of my non-executive directors and also extremely experienced in scandium and also gold. And then the person who I credit with the find, we found the deposit together, was Claudio Sheriff-Zegas, who's got previous history in rare earths with Northern Minerals. So where do we go to from here? Okay, so we're still receiving results from over 10,000 metres of drilling. Metallurgical test work is underway, well progressing, and we expect we'll release a report to the market within the next month. We're working on an interim maiden resource, which we believe will be on an indicated basis. We've done enough drilling to be able to get an indicated resource. And subject to a positive metallurgical result, which we believe we're going to get, because all indications point to that direction now, we'll then move into the early new year with a scoping study and then hopefully then into a feasibility study. And while we do that, obviously, and while that's all being done in the background, we'll continue to drill and see how expansive this deposit is. So, you know, I started this on the basis that, you know, we call this the rarest of the rare, and let's think about the components of this find that make it so exclusive. You know, we have a very, very high ratio of heavies to lights, approximately 65%, which is quite outstanding. We're close to surface, which makes us very unique. We're in the regolith, we're an oxide. We've virtually got no uranium or thorium, brings our cost of production down. We're shallow, cost of production reduced again, 1 to 20 metres. We're in a tier 1 location. We own the pastoral lease. We have incredible amounts of water out there on the Tarmoola aquifer, one of the largest aquifers in the country. We've got accommodation facilities. We've got yellow gear. We've got machinery out there. We've got road access. The ground is easily accessible. And we've got a great reduction in statutory impositions because we are the pastoral lease owner. But don't forget about the gold. We have a hedge, and at the moment we've got 152,000 ounces out there. We believe we can increase that substantially with minimal drilling. A lot of our last mineral resource estimate didn't include a lot of the gold that we've already found. And have a look at the area we're in. Look at the people around us. Okay, so we're going forward with a continued gold exploration while we continue with our rare earths. The two hedge each other nicely. We've got numerous follow-up gold targets, two of very exciting targets you can see up there. One of them, which in the turn of the century recovered 28 grams for the tonne, quite amazing, at the Little Wonder mine. No drilling's been done there since. That's our board at the present time. Myself, my co-executive director, Perez Shapiro, and Matt Longworth. That's where we sit today. Share price of around 0.28. We've got a market cap of about 41 million. We've got 1.46 billion shares on issue, and at last announcement about 3.5 million. a very, very strong top 10, a very strong top 20. The company's very well heeled and very supported, and I could see quite a few of our shareholders today. So I thank you for listening to this presentation. I think this is a very exciting opportunity. I remind you, costs of production are greatly reduced. We're shallow. We've got very, very high levels of heavy rare earths to lights. We're in a great location, got plenty of water, we've got good people, and we've got a very strong future. And I'm not going to tell you about the football.
No, you don't care, do
But
you?
don't ever listen to an Essendon supporter about anything.
Oh, what's been your experience? Or was that you're an Essendon supporter? Is that
No,
what
I
you're
know
saying?
Chris very well. So,
Okay. And now you're bringing out friendships, who you know. Which is important, isn't it? Who you know, what you know. Yeah. So nothing at all will sway you to even give a tip.
Thank you.
He's got, hey, those results that you were talking about, September, October, when is it more likely to get them back? October now at this point?
We'll have continuous drilling results right through this quarter, but probably the most important thing for this company that everybody will be focused on is this metallurgy. You know, it really goes down to the commerciality. Rare earths is all about the commerciality of the project. This is looking very exciting. Everything we've seen to date from metallurgy is very positive. That metallurgical report will be completed, we would say, within the next 4 weeks. That's what it's all about, and that we believe will be a major company maker.
Just interested because I know a lot of our miner explorers and miners are having problems at the moment with labs and also getting drill rigs. They're absolutely working overtime at the moment. Right, let's welcome our next presenter up to the stage. He looks like he could be playing in the grand final this weekend. Oh, wrong side. Who would you be playing for? Oh, wrong side of the stage. Well, that too. Well, look, you're going to be on the right side when it comes to this presentation. This is Jardee Kininmonth, everyone. He's the Managing Director and CEO of Future Metals NL. Now, their big project is, it's the second largest PGM project in Australia, isn't it? I could go on with all of this information here, but I reckon the best person to tell us all is you and give you more time. Would you please welcome Managing Director of Future Metals, Mr. Jardee Kininmonth.
Thank you. Good to be back in my old hometown of Melbourne and seeing it bustling again. I was previously here in late 2020 and fled for reasons I'm sure you're all aware of. But yeah, let's get into the Future Metals story. It's a great time to be presenting the Future Metals story. We've got a very busy couple of quarters ahead as we progress the scoping study on our existing resource, as well as look to test step-out targets in the basal contact at our Panton project there too. So we're located up in northern WA. We own 100% of the Panton project. It is the second largest PGM project. PGMs are platinum group metals, by the way, platinum, palladium, and iridium, osmium, and a couple others. It's got 5 million ounces of PGMs in the ground and 240,000 tonnes of nickel. Importantly, a big portion of that sits in our high-grade reef. And really what that affords us is very valuable development optionality. It allows us to take a staged approach to its development. So a high-grade project up front with large-scale potential down the road. As I said, we're now gearing up to test the basal contact, which is previously untested. We'll have a drill rig out at site in 3 weeks' time. The basal contact is a similar style of geology to what Chalice found their Gonneville project in. It's where Galileo have had recent success at Callisto, and it's also where Caspian are testing down at Yarrawinda. We are clearly in a top-tier jurisdiction for progressing a project, being in Western Australia, and particularly in the context of the major supply hubs of PGMs being Russia and South Africa, two fairly challenged operating and investment environments. We're the most progressed project, PGM project in Australia. We've got the benefit of 20 years of work behind us across multiple streams, including mining studies, geology, and metallurgy. The project sits on 3 granted mining leases that predate native title, and it's remote, but it's remote in a good way. It's a great place to build a project, and it's got access to all the requisite infrastructure. So hopefully after that brief spiel, you'd agree with me that we are trading at a fairly uncommanding valuation of circa $50 million, which is about $6 to $7 per palladium equivalent ounce at the moment. We're well capitalized to progress both key streams, being the scoping study and the drill program about to kick off. We completed a well oversubscribed placement and SPP in the last month, which we thank the new and existing shareholders for supporting us. We're also AIM listed, and there is a traded option class on the ASX under FMEO. The board's led by Justin Tremaine. He's a proven company builder. He's supported technically on the board by Alan and Rob Mosig, Alan Mulligan and Rob Mosig. They both have prior experience with Panton. And then Liz provides an important corporate governance and accounting tax overlay. My background, I was previously at Galaxy Resources in corporate development. I was the lead on the merger with Orocobre that formed the $10 billion Allchem. And then prior to that, I was with EMR Capital, the large mining private equity firm led by Owen Hegarty here in Melbourne. While I was at Galaxy, I worked closely with Brian Talbot, who was the COO there. So he's a part-time effective COO for us here at Future Metals. He started his career, first 15 years of his career were spent building and operating PGM plants in South Africa before moving into lithium. We've also got Andrew Shepherd as head of project development. He was head of technical services at St. Barbara, stationed out at their Gwalia mine. So he's very strong, deep, narrow underground mining experience, as well as study management experience. Shane Hibbard was the senior geologist for Platinum Australia in the early 2000s when they were doing their initial 30,000 metre drill out. So he knows the rocks in the country there very, very well. And then we've recently appended the team with well-known late intrusives and geology expert, John Hronsky, who has over 35 years experience exploring for and studying our style of geology. So platinum group metals, predominantly platinum palladium, are used as the key use case for them is catalytic in catalytic converters. We see the market there remaining strong moving forward. I think what we're seeing play out at the moment is that the clean energy and EV transition isn't going to happen as fast or as smoothly as what we'd probably hope. I think what that leads to is particularly hybrid vehicles taking up a larger portion of the personal mobility space. And they are just as PGM intensive as ICEs. Platinum also has significant blue sky upside with its key being a key input into fuel cells and electrolyzers. And then we've obviously got a significant amount of nickel in the ground out at Panton as well. So we're well hedged, I guess, as to how the personal mobility sector plays out. Supply side's an even bigger tailwind for us. Panton's extremely strategically located, being here in Western Australia, outside of the key PGM supply hubs. Russian supply is really being disintegrated from Western consumer supply chains currently, and that leaves South Africa, which is in itself a challenged jurisdiction. Clearly, it has power availability, labour relations issues. The majors who have built their businesses there are looking to allocate their capital elsewhere as their mines get deeper and more expensive to run. So I think that says the incentive price isn't quite high enough across the PGM sphere currently. Location, as I said, excellent place to progress a mine. We're 300 kilometres south of Kununurra and 70 kilometres north of Halls Creek, both of which have sealed airstrips. We're 1 kilometre off the Great Northern Highway, which is the main transport artery up there. It's a very well kept road. We're 300 kilometres south of the Port of Wyndham. That's where Panoramic export their Savannah concentrate out of. That's where the Ridges Iron Ore Project exports out of. And there's also potential to tie into the hydro scheme out of Lake Argyle, which is what the Rio Pink diamond mine was feeding off back in the day. We came out with a new mineral resource estimate in June. It relates to 2 discrete geological portions. It's a 5 kilometre outcropping resource, both the high grade and the surrounding bulk mineralisation. The high grade reef has been drilled down to a depth of approximately 800 metres and is open at depth. Importantly, it is interpreted to be shallowing as it plunges to the southwest as well. It's got an approximate thickness of 1.5 to 4 metres across that 5 kilometre strike. And the surrounding bulk mineralization similarly goes along that 5 kilometre strike, but has a thickness of 50 to 75 metres, and that's been estimated down to a depth of 150 metres. So project optionality is extremely valuable here. It allows us to progress a high-grade underground project up front that's more befitting of a junior mining company. So we don't have a massive capital call coming to the market once we progress through the study phases. But we've also got that scalability potential to potentially entice a large strategic partner to help us along the journey as well. So the revenue line does change a fair bit between being a high-grade underground versus a bulk mineralization project. The underground project is PGM dominant versus the bulk mineralization. Nickel becomes a significant contributor to revenue. And that's just because the nickel grade is very consistent across the low and the high grade. So we, as I was saying in the intro, we fortunately acquired this project with 20 years of data and test work behind us across both physical separation, flotation, and hydromet. Physical separation, we're really looking at ore sorting there, and that's splitting out the high-grade reef from the surrounding lower-grade material. It's already been shown to work very well, given the densities are vastly different and the colours are vastly different, giving us a few sorting conditions. We also walked into Panoramic having cracked the code on how to process the high-grade reef. So we're able to produce a saleable concentrate direct from that high-grade portion of the resource. And hydromet adds another potential string to our bow moving forward. The base case is really to produce a saleable concentrate, but there's potential down the road to produce a refined metal product through hydromet as well. You really have to understand Panton's geology or magmatic layered intrusive geology to understand why we're excited about the upcoming drill program. The best way to think about it is shown in the center there. So these things basically form as a martini glass. So you've got a magmatic staging chamber down below at depths. It forms a pipe up towards surface and pumps magma up to surface through the stem of the glass. If it's a sulfide-rich environment, the sulfides will agglomerate and start to settle along the base of the glass and close to the stem of the glass and start forming within those base layers, whereas the PGMs, which are lighter, tend to form reefs above those base layers. So what's been explored to date at Panton is really just that reef style mineralization, and that's because it's fortunately for us folded into more of a wine glass now from the pressure of the country rock, and that's been the thing that you can look and see and lick and walk along, and so that's why it was found so long ago. But what has been untested is that basal contact, which is much more prospective for an accumulation of sulfide mineralization. And that's the style of mineralization that, as I mentioned before, Galileo have been drilling, Caspian have been drilling, and Chalice have been drilling. We've got a couple of concepts that we're looking to test during this upcoming drill season. You can see there in the middle, we've got the wine glass shape, and then you've got the basal contact shown on the left with the main reefs folding up there towards surface. The first concept that we're looking to test is the Keel Zone. Importantly, while the sulfides form below the reef, the whole intrusion has plunged up towards surface in the northeast of the tenement. So it means that we can test these zones where the sulfides have accumulated with reasonably shallow drill holes. We don't have to drill over 1 kilometre to test that basal contact. And so that's what we're looking to do this season, next couple of weeks. So that gives you a section of where we'll look to put those initial drill holes testing the Keel Zone, which is where we think is the focal point of that sulfide accumulation. Importantly to note, the reef in that fold zone or along that Keel Zone is where it's at its thickest. That's where the ounce meters are the highest. That's where the reef is at its most valuable. That's also where we've found the highest grade base metals and sulfur values within the reef. So there's a couple of pointers there suggesting that something is feeding that sulfide material up into the reef as well. And then the rest of the other concept that we're testing it's just the rest of that basal contact. And so that's already had 20 RC holes put through it by a prior owner back in the day. They all came back mineralized at around 1 gram per ton palladium equivalent. And that's across a strike of 4 kilometers and a proven mineralized width of 270 meters. One of those RC holes actually jagged what we think is the tail of a sulfide lens within that basal contact that we're keen to follow up on once the rig gets out there in a few weeks. There's also been a 520 meter hole put into that zone, which came back completely mineralized too. So as I said, a highly mineralized environment. And we're looking to run EM over that entire zone to hopefully come up with a number of large conductors. So we have had airborne EM over a portion of the tenement that was done by Panoramic back in 2016. Unfortunately, they missed the entire basal contact essentially. What they did hit was portions of the reef, which have shown strong conductors that do line up with high-grade base metal intercepts that we've come across in the historical data as well. But likely more interesting is the string of conductors to the south there. What we think has happened there, and we think it supports our Keel Zone concept, is that the other side of the keel, settling down a depth of say 1.5 kilometers, has been punched through by a later granitoid, which runs alongside that string of conductors and remobilized those sulfides up towards surface such that they're close enough to surface for an airborne EM to pick up on them, which is about 200 to 300 meters deep. So we've currently got a couple of guys running a fixed loop EM over those to give us a deeper and more granular view of those conductors. And that's where the rig will test first. We'll then run moving loop over the portion of the basal contact that got missed by the airborne, and we're expecting that to light up and similarly see a string of conductors towards that northeastern corner as well to support the Keel Zone concept. So it really is the right time to be progressing Panton. We've got an extremely strong price environment already, but with supply and demand tailwinds behind us moving forward, we've proved up the scalability potential of Panton, and we've got an excellent exploration model that we're testing imminently to make the next nickel copper PGE sulfide discovery to append our existing impressive resource. So the news flow is going to be fairly fast and thick. We're in a very active time. We've just completed a gravity survey across the entire intrusion, which we're currently modeling up with the existing aeromag data. As I've said, we've got the EM survey team out at site, and then we've got a rig heading out in 3 weeks' time. We'll run downhole EM down each of those holes, and then we'll run, and that's all running in parallel to the scoping study work stream on the existing resource. We'll also look to append that scoping study with a detailed MET release there too. Thanks for taking the time to listen to me. Please come talk to me at the booth if you want to discuss any more detail.
That's the closest I've got to any of our presenters today.
How much over do I go?
Well, I think that the good thing is that you're obviously very, very interested in what you were saying. So I'll pay you for that one. Why did you actually leave that pretty good job that you had at the start of the year to come here? What was it about this company that impressed you? Hey?
No, what essentially happened was the whole Galaxy team got moved on as part of that merger process, and the focus of the company being all chem was now on the East Coast and in Buenos Aires. So I didn't want to move from Perth, so I moved on.
So you found something that's obviously interesting you though, and you can tell by the way you're presenting. So that's good.
Yeah, I'm super revved up. As I said, it's a very exciting time for us. We've got multiple value levers being progressed. So
imagine if you won Lotto, how excited do you reckon he'd look? Just calm and cool on the outside. Jardee, thanks for coming and sharing it with us, and best of luck, and enjoy your time speaking to potential investors in your project. Right. As the next fellow comes up here to join us on stage, it was interesting as we came in from the airport, because our team hasn't been here obviously for the last 3 years, because our Premier had a nice little wall to keep us all safe. But looking at all of the building that's being done, it's just amazing. And one of the key building blocks of all those buildings, the glass, etc., is a little thing called silica. And apparently we're using this little mineral at a far greater rate than we are producing, finding, presenting it to the public to be used. And this fellow up here knows a little bit about this. Would you please welcome Bruce Maluish? He's the Managing Director of VRX Silica. So I suppose a question for you today, Bruce, is do you have a solution for us, a solution for this shortage of silica that could also help increase our little investment portfolio, please?
Yes to each. But thank you, Chrissy. And thanks to the Vertical Events guys for giving us the opportunity here to talk about silica sand. In 2017, China made silica sand a strategic mineral. And at the time I wondered why. And I did a bit more research and I found that every single country in Asia at that time, except for Vietnam, had banned exports of silica sand. They're all concerned about their own domestic supply of silica sand. Understandably, there's a voracious appetite for silica sand, particularly for concrete, 50 billion tonnes a year. It's the most used commodity on the planet after air and water. It's also the most abundant, but predominantly it's in desert sands. Desert sands aren't suitable for making concrete and also not suitable for making glass. They tend to be windblown and they're rounded off and you need angular grains to make concrete, and also they have to be relatively inert. And desert sands, you'll notice, are sort of yellowy, orangey, red even, and that's iron. And iron is the enemy when it comes to making concrete and also certainly for making glass. So discount desert sands. Beach sands are predominantly calcium carbonate, they're shell grit. So they're also not suitable for making concrete, and they're not suitable for making glass. You take those out of the equation, you're not left with a whole lot. And we use silica sand everywhere. You're surrounded by it all the time. Unfortunately, in Australia, almost all of it is imported. All the products that are made from silica sand, from solar panels. We do make swimming pool filtration and we certainly make concrete. But container glass, we've got 4 container glass factories in Australia. We have 1 flat glass factory here in the Dandenongs here in Victoria, who are really struggling with the LNG prices here at the moment, here on the East Coast. But casting, foundry sand for casting, building cladding, flat glass for windows, fiberglass insulation, roof tiles, automobile glass. The rubber tyres on your car are about 30% silica sand. And certainly when you get down to telephones, you start talking about you know, the glass that's on the front of your smartphone, which is called Gorilla Glass, which is another story. Come and see me and talk about that. But it's in plastics, it's in paint, it's in the LED lights, it's in the camera lens, wherever that is. You're surrounded by it all the time. But we've got 4 deposits. They're all in Western Australia, and we're West Australian based. But WA is a tier 1 mining jurisdiction. And these are huge deposits. We've got reserves on our first 2 projects of 200 million tonnes. At 2 million tonnes a year, that's 100 years. So these are the most advanced silica sand projects in Australia. There are a number of players in this sector now, and it will become a bigger sector, particularly in WA, because of the demand that's coming out of Asia. Asia is not only are they restricting exports, they're running out of sand. Sand is a finite resource. You can't go and discover any more sand. All the sand resources in the world are known. Not like you can drill deeper and go and find some more copper or gold. So we have mining leases over 3 of the projects. Our first project is Arrowsmith North. We expect to be in production in 2023, subject to final EPA approval, which we're pretty close to. We've got very strong demand from customers in Asia. We've got over 70 companies have expressed an interest to buy our sand. 45 are from China. Our Mushay project in particular is very high grade sand, and it's high enough grade to be able to make what's called ultra clear glass. And the biggest market for that is the piece of glass that goes over a solar panel, and we know where solar panels are going these days. we've got about 500 odd million shares out there. We've got about $8 million in the bank. We're market capped at, I think today at about 70 million. A very experienced board. I've been in the mining industry for about 45 years in gold, nickel, iron ore, mineral sands. And most important, down the bottom there, your Neil Kim, he's been selling silica sand for about 17 years. He's our main contact for all of our buyers. Very experienced in all sorts of silica sand products. Each of the projects is subtly different. Sand is not sand is not sand. So, and the very subtle change in the sand determines which market it goes into. So our projects are not competing with each other for the market. That's an important consideration. And sometimes the change is so different. Arrowsmith North, we can produce it at 99.7% silica dioxide. That's flat glass, container glass, automobile glass. But Muche is 99.9%. It's only 0.2%, but it's a completely different market. It's ultra clear and architectural glass. And the demand is different for each of them as well. And the countries that want those products are all different as well. But it's very simple, low impact mining and processing. We've got infrastructure next door to each of these projects. We've got a main road, the Brant Highway. We've got a railway line with access directly to ports. We finished drilling out water bores at Arrowsmith North and Arrowsmith Central. We've got plenty of water, which is critical when it comes to processing sand. And we've got 2 gas pipelines run past each of the projects. Infrastructure planning and permitting is well advanced, particularly on Arrowsmith North. We've got a reserve here of 200 million tonnes. We're looking to build a 2 million tonne per year plant. We have finished all the exploration, the process circuit design, the engineering, and we're actually down to detailed fabrication drawings at the moment. So as soon as we get EPA approval, we're ready to pull the trigger here. Oh, as it happens, right next door to Arrowsmith North is the Waitsia gas field. And we're looking to get gas directly from the gas field. And in fact, we're considering at the moment putting a power station right at the wellhead after the gas is dewatered and before it's compressed. It'll be the cheapest energy solution possible in Western Australia. We're at the point here, there's a 3-stage process in WA for environmental approvals. There's a referral, a scoping document, and then a referral document, which is the last document which we have lodged, which we lodged in July. We expected a response by August. We're still waiting. Unfortunately, the EPA is horribly under-resourced at the moment and they're struggling. Arrowsmith Central, that's at the 2nd stage. We've got an ESD document sitting there at the moment. The ESD is a document that describes the studies that we think are required to conduct the assessment. And this has been done in consultation with the EPA. So we're waiting for comments back on this one as well. The material we're looking to mine is a loose sand. So you don't get a lot of vegetation in it. So this vegetation is called Quangan Heath, and it grows about waist high, predominantly this sedges and grasses in this Banksia. So we've developed a system called VDT, and I'll explain that in a second. But we think it's the best method for restoration. Muche is extremely high grade. It is one of the world's largest high grade silica sand deposits. Now, WA hasn't played in the silica sand market all that much, but in the last 5 years or so, the supply side of the equation has made it very tight for sand. Consequently, price has gone up a little. And the price has gone up to the point now where it can handle the shipping from WA to Asia. But Muche is of such a quality, we think there's an opportunity here, particularly with 2 gas pipelines and a domestic reserve gas available in WA, that we can put in a glass plant. 80% of the cost of producing glass is energy. Currently, LNG in WA is the cheapest in the world. Musha is very sort of similar vegetation. The low sedges and shrubs here are suitable for VDT, and the taller banksias there are easily propagated. So this lends itself also to VDT. Processing, very simple. The key to this is actually called attritioning, where it's an agitated slurry where the grains rub on themselves and polish each of the little quartz grains. So the rest of the circuit's just taken away the material that you've ground off each of the grains. Very simple, no chemicals involved. It's quite a simple process. A plant here, 40 to 50 million bucks. The last time estimate we had 3 years ago was about 30 million. That's certainly going to be more these days. This VDT is where a modified bucket on a loader takes out a sod of earth. And the sod is about 3 metres by 3 metres and about 400 mil deep. And the vegetation generally has root systems 200 to 300. So we extract all the roots, all the microbes, all that fungi and all that sort of material in the topsoil, and also many of the invertebrate fauna. And we take the sod out and we put it back behind us where we've just been mining. So it's a very quick process, and it's ridiculously simple, but it's easily the best outcome for restoring this vegetation. We take our ESG responsibilities very seriously, and at this planning stage, we've got the opportunity to do a lot, to meet a lot of our priorities. We've got a good engagement with the local First Nations people, local community we've had a lot of time with. We think we can generate power as cheap and as clean as you could possibly get it. And we've got agreements in place with the Aboriginal groups, and we've also, we've conducted all of our heritage surveys there. So we think it's the right time, the right place to be in silica sand. They're very long life. Once we establish these and establish all the infrastructure, these will be around for a long time. And the domestic gas reserves, and also the Midwest at the moment is going to become renewable central in WA, and certainly hydrogen central. There's about 4 or 5 hydrogen projects that are being developed in this area. So we're in a good area. Nippon Sheet Glass have already demonstrated that they can make glass using hydrogen. So the technology is there for that. We've got this capability at Musha to produce ultra clear glass. And ultimately our aim here is in Western Australia, make solar panels. Now the demand for solar panels is just huge. Now we're going to probably end up with a big multinational helping us out there, but there's certainly a huge opportunity. So thank you very much for listening.
Thank you very much. That's interesting, isn't it? You don't realise how much of that particular mineral that we need. What's your tip?
Well, I live in Fremantle, but it's hard work.
Oh.
Now I think Geelong.
Who? Geelong.
Geelong.
Did that come out of your mouth?
Older and wiser guys in here.
Okay,
They're
good
the
on
ones
you.
I like.
Go and sit in your corner now. Off you go. Right, next fellow is coming up to join us. Look at this. This is a doctor. He might have even more answers. Dr. David DeTata. Again, not one of those sorts of doctors. This is one of the doctors in the minerals type field. Would you welcome him up to the stage, please? We are going to discuss a specialised undercover explorer and project generation that's focused on discovery in the greenfields here in Australia. The company's name is Strategic Energy Resources. Now, they are actively exploring the undercover extensions in the world-class Mount Isa province, which is up in northwestern Queensland. They're also looking at the Lachlan Ford Belt, Cobar Basin, and you've got one up in the Northern Territory as well, don't you? Would you please welcome David DeTata to talk to us about the SER story?
Yeah. Thank you, everyone. Good afternoon, and appreciate you all taking your time out to hear a bit more about Strategic Energy Resources, ASX code SER. SER is a specialised undercover explorer and project generator, and we are focused securely on the greenfield frontiers of Australia. If I was to summarise our exploration strategy in one slide, it'd be this image here. What we have here is a cross-section of our core tray taken from drilling last year at our Silica project in northwest Queensland. And this is part of from 507 metres down, a 132 metre intersection at 0.1 nickel, with a higher 2 metre at 0.68 intercept nickel. All the right ingredients. This is our exploration space, deep undercover where Australia's next tier 1 deposit will be found. And we have a science-driven approach and a pipeline of greenfield projects that maximises our chance of success. Standard disclaimer for everyone. SER is currently exploring 4 major greenfield projects across Australia, which all have one thing in common. And that is, if you were to take our tenement locations, follow the same structures that's underneath those tenements, back towards area of shallower cover that is less material at the top that is barren, you will find major mineral deposits. First 2 projects are located amongst the most heavily mineralised rocks in the world. And they form part of our Isra Undercover initiative. And these are the Kenobi and Isra North projects. And you can see exactly just how close we are to some major mineral deposits. The third project is in New South Wales, where we're chasing, again, known mineralisation undercover at our South Cobar project. And in there, we're alongside the Browns Reef polymetallic deposit in the Achilles Shear Zone on our western side. The fourth project is truly a greenfields region, and that is in East Tennant, and I'll explore that one further as well as part of this presentation. These projects, by definition, are greenfields. They are remote, they are deep, they are expensive. And we understand that. So as part of our raising capital to ensure that we can give each of these projects justice, not only do we take on typical capital raisings, we explore other means as a way of funding our exploration program. That includes applying for government grants. We're very successful at doing so, and offsetting over $600,000 the last couple of years alone. Divesting projects or cash or script and enter into joint ventures. And we have one that I'll explain as part of this presentation with Fortescue Metals Group already. This is SER. This is the whole company in one snapshot right here. Our executive chairman, Stuart Reckner, who's in today here at the conference, and we'll take some questions after this for sure, is also on the board of Kingston Resources, which transitioned from an explorer to a producer. Anthony McIntosh complements Stuart on the board, involved in the 2019 transaction which took Echo Resources into Northern Star. Plenty of experience in project generation and deals. Our geology team is part of has a mixture of youth and experience, with Neil Chalmers leading our project generation side. And some of you may recognise Dr. Chris Yates, the former Executive Director of the Geological Survey of New South Wales, critical in putting our New South Wales strategy together. Tight capital structure, only 284 million shares on offer. That cash value reflects a small raising that was done just this month, limited to only current shareholders. We are ensuring in the time that is now, where it is very difficult to raise capital in the market for juniors, we're ensuring our current shareholders are first in line and they take priority in raising. So we ensure that any offer goes to them first, and we ensure that we keep our cash at a point where we continue all of our exploration programs while we also look at divestment of some of our non-core projects. Major shareholders, you may recognise Dat Capital. That is Emmanuel Dat. He joined in 2020 as a major shareholder and is firm in his understanding that we pursue our strategy in greenfields exploration. Top 20 holds 55%. Our first greenfield project is the Kenobi Project, located 150 kilometres northeast of Cloncurry and captures a 100-kilometre north-south swathe of the Quamby Fault. Follow that Quamby Fault down to the Mark Magret Fault, you find that Ernest Henry mine. Project began back in 2016 as the Lucky Squid high-grade gold, and you see that small tenement pointing to in the middle of the screen there. That project was taken from Falcon Minerals, and it came along with a couple of historic gold hits from JVs that had entered into that project, including 2008 Anglo American, 17 metres at 0.6, and 2010 Anglo Gold, 15 metres at 9. Enough for us as a junior to be interested in the gold hits themselves in that region. We took on that small tenement holding in 2019, tried to tie those two intercepts together, 6 metres at 12 grams per tonne. So there's gold there, but it is deep, and we recognise that. At that time, we stepped back and thought there's got to be more than just this isolated high-grade gold hits. There's more than Lucky Squid. There's something else here. And we went on to secure over 2,000 square kilometres, which is now called our Kenobi Domain project. We followed up with some additional drilling and unfortunately unable to extend the strike, but there is more there than just high-grade gold. So we went back in time after we picked up this tenure and explored what are some of the historical hits across this whole Kenobi Domain project. And going through the historical intercepts, we saw in 1994 MIM exploration hit the Tea Tree prospect. So there's nickel there. And remember, this is in an area that is not known for nickel at all. And the best place to find nickel is where you've already found it. So in 2021, we approached the GSQ, got some co-funding to put a hole in to try and understand what this gravity is doing in this region, which is mapping in this image here. And we hit the Kalaka drilling, and you saw the first photo already, 132 metres of 0.1% nickel, from 507 metres down, and a 43 metre intersect of 0.1% nickel. So there is more nickel there. We took this on board and tried to understand exactly why we're getting nickel and what is targeting, and what is the best geophysical way to approach this, given we have to travel 500 metres before we get to it. What we gained from this geophysical review is that, in fact, the gravity is controlling where the nickel intercepts are. So therefore, for us to understand and target more areas of higher nickel and potential follow-up drilling in, we need to understand exactly where the best place is to drill, which means doing more gravity. As part of the capital raise, we said to our shareholders, we need to find the best spot to drill. We need to do a gravity program. We've done that gravity program. Next month, we'll have some results and know exactly where to drill next. Our second Greenfields project, located 200 kilometres north of Mount Isa and capturing 80 kilometres of the Mount Gordon Fault, hosts the Capricorn mineral deposits held by 29 Metals, which was the largest IPO on the ASX last year. Currently, it was valued at $1 billion on its listing. The Isa North project was held by Newcrest until we took it off their hands in 2021 when we acquired it for zero cash. The project still comes with a NSR from Newcrest and a first right of refusal. And since we moved into the region, as you can see, there are some others that have followed suit, small companies including Rio, FMG and Anglo American. We were there first. They've come in and surrounded us since, and discussions continue with those companies exactly why they're there and why we're there. In 2019, Newcrest drilled 9 holes as part of their exploration program across this. The key takeaway from this is they were targeting tier 1 deposits undercover. Sound familiar? Absolutely it is. The best intercept that they had before they had to walk away from the project lies just south of that second or the bottom horizontal line. That target, Lorraine North, was drilled northwards. The reason those 2 horizontal lines there is that is a landholder that would not sign over at the time. We have, since getting the project, been able to sign that landholder over, and it gives us the opportunity to follow up on holes that they could not put in as part of their exploration campaign. Remember, they walked away because they couldn't get access. We now have access. And what looks like the next 6 months for us is to gain additional landholder access along the whole entire tenement boundary before we work out exactly where we're going to start drilling. Moving now to New South Wales and our South Cobar project. The project's located at the southern end of the Cobar Basin, New South Wales, a proven mineral region with recent discoveries, including, of course, Aurelia Metals Federation deposit. The 290 square kilometre South Cobar project covers the Achilles Shear on the west and the undercover extensions to the Wurrara Fault on the east. The most advanced of the targets is the Achilles 1 prospect, which was originally identified by Santa Fe Mining following a grid soil sampling project, before following up in 2005 by Western Plains on a small drilling campaign where they designed a 2-hole program. The first hole in the program drilled proximal to the main target, hit 64 metres at 0.1. The second hole, which was supposed to be over the target, failed to reach basement. Since acquiring the project in 2021, we've run an airborne magnetic survey across the entire project, delineated 8 prospective targets. We've run a soil geochem program. We know exactly where we want to put the drilling program. We've applied for funding, received 120K from GSNSW to undertake this program. Currently, permitting is in place. We'd like to see our neighbours doing good things. In 2021, Australian gold and copper intersected 85 metres at 0.13% copper as part of their Achilles 3 program, right above our Achilles 1. And Eastern Metals continues to return decent polymetallic intercepts as part of their Browns Reef. A fourth project is located within the highly prospective but underexplored region between Tennant Creek and Mount Isa. We were lured to the region following the Geoscience Australia's $100 million investment in trying to understand and uncover a major mineral discovery in this region. So we followed the big money in this case. This is where is the federal government trying to spend to open up a region. We were very quick to jump onto this bandwagon, and I'll call it a bandwagon because everyone's jumped on since. We secured 1,300 square kilometres of tenure hosting gravity and magnetic highs, which are also very common to our Tennant Creek style of deposits. Since securing 1,300 square kilometres, we received some government funding to do some gravity, tighten up those targets, and then we're encouraged to see Middle Island, Inca Resources and Encounter come in after us and have some encouraging early results in the region. In 2021, we received another government grant to do some drilling. Unfortunately, the results were not as promising as everyone in that region had hoped. And from that, we learned that the way that we target this style of deposit up in this region is to have better geophysics. So we've got a third grant in the Northern Territory to undertake an IP survey set to commence later on this year. We don't think that the East Tennant region story has been yet to be told. We are focused on some of the results that have come from the area, including the 10 stratigraphic drill holes that Geoscience Australia put out, as well as over 10,000 metres of drilling, which is yet to be assayed and released to the market from Inca, Greenvale, and Middle Island. We watch those ones with interest. An added bonus for all our shareholders is back in 2019, we signed a deal with Fortescue Metals Group, and that was at our Mile Creek project at the Eastern Gawler Craton within the Olympic Copper Gold province. And you can see exactly our project location, which is overlaid with a magnetic image and FMG surrounding us. They approached us, interested in our ground, and we've since entered into a joint venture, farming joint venture agreement with FMG. Since that time, we've had native title discussions progressing, and we're not quite at the point where they can get on ground, but we see this as an opportunity for a free hit for those shareholders that have been involved in the company, and that any results that comes on that sees FMG getting on ground is positive for SER shareholders. So this is what the next 9 months looks like for the company. At the Kenobi Project, we'll see some results targeting those nickel sulfides in our Kenobi Project. Isa North, clearing the way for landholder agreements. We'll see if a drilling-wide exploration campaign across that whole targeted area. South Cobar, we have drilling permits that are about to be submitted. See us getting on ground and doing some drilling. And of course, East Tennant, an IP survey, but all those explorers putting out decent results should see some reflection in what I believe our share price may take. So SER is committed to investing, to targeting tier 1 discoveries undercover, which takes a science-driven approach and strong collaborations with multi-agencies to make that happen. I've shown you 4 of our greenfield projects today. What we have is behind these projects is a whole range of other projects, which we've taken the role in getting those projects to helping assisting our greenfield exploration campaign. Thank you all. That's it.
22 seconds. What's your football team?
Oh, it's Sydney.
Oh, really?
Yep, Sydney.
Are you going to win? Are you using this conference as a potential junket to stay in town and watch the game?
No, unfortunately not. I'm in a lot of trouble for being here this week with the kids at home, so I'm the first plane out of here.
You're honey. Okay, well done. That's all right. I've got some mates that just put something on the book face, and they are Fremantle supporters. They bought their tickets earlier in the year, $2,350 for each ticket, 4 tickets. He's trying to sell them at the moment because they've got COVID. So whoever makes a really good profit today might want to give him a ring. I can give you
to go to the game.
Yeah, he had 4 tickets to go, $2,350 for each. Yeah, and his kids are 6, so they're not coming. Bye-bye. All right.
Thank you.
Back to important things. Thank you so much. And as David said, he and Exec Chairman Stuart Rechner are available to talk. Give him a clap, please. Yes. Right, one man stands between us, afternoon tea, but potential investment strategy. Look at you, look at this fellow here. This is Firebird Meadows, we're being represented here. Another great West Australian company focused on the exploration and development of its 100% owned portfolio, comprising of four highly prospective manganese projects, and they are in WA's renowned, as we've already heard so far today, the East Pilbara Manganese Province. Peter Allen, would you like to tell us about it, please, sir? Please make him welcome.
Thanks, Chrissy, and thanks for being inviting me to be here to present Firebird Meadows. I did try to get a bit of a head start, but they put me back. So past the disclaimer. So yeah, so we got 4 manganese projects. Our key focus is our Oakover project, which is about 85 k's east of Newman. We listed on the ASX in March 2021, so we've been going for about 18 months. We listed with the Oakover resource, which had a 64 million tonne inferred resource at the time, and our strategy really was to focus on high purity manganese sulfate for the lithium ion batteries sector as a key, and then as a bystander or as a consequence to facilitate that, a concentrate that would go into the steel industry. Both those markets are well, one is burgeoning, growing market. The other one is a very long-term, sound, structured market. So over the last 18 months, we've grown our resource from 64 million tonnes to 229 million tonnes, principally split over 2 projects, 172 million at Oakover and just about 58 million tonnes at a project to the south called Hill 616. At the same time, we've been doing a lot of metallurgical test work, looking at how we can first take the product in the material in the ground to a saleable concentrate for the steel industry. And now we're taking that saleable concentrate and looking at how we can go into sulfate. We've done a scoping study on the concentrate. We're now working towards starting a scoping study on the sulfate in the near future. As we go, we look at how we can develop everything with an ESG principle in mind, based on renewable energy, being not far from an Aboriginal community, looking how we can develop that project and develop the community as we go. So as I mentioned, 85 k's east of Newman, we've put 400 holes in it over the lifespan, about 20,000 metres. That's culminated in a 172 million tonne resource. In the ground, it's just under 10%, 9.9%. But importantly, to recognise very high silica in the ground, so about 40% silica. So through the beneficiation process for concentrate, we look to remove the silica and therefore upgrade the manganese grade. Importantly, 58.7 million tonnes is indicated, with the rest in inferred. We'll be doing a drill program early next month to convert more inferred to indicated. As I mentioned, of the 64 million tonnes we started with, 61 million tonnes was at 66er. And we converted that 61 million tonnes into that 59 million tonnes of indicated. So very high confidence rate of conversion from inferred to indicated. So we look to grow our resource and our potential mine life through that process. The key here with this resource is it's on surface, it's outcropping, very low strip ratio, 0.9 to 1 strip ratio in potential mining. You really want to just focus on the top 25 to 30 metres. Keep costs low, treat it like a bulk material. To point out as well, that's 66 to there. Sorry, my hands are shaking. To the east is JI, to the south is Karen. They are the ones we're going to be doing infield drilling on. So part of the concentrate test work, we've been putting it through crushing, screening, scrubbing, and then that is mandatory. From there, we've been looking at options on what is the best way to optimize the process. So 2-step process, also 2 potential options. One is ore sorting. It's a low capital option. And another one is then putting it through a DMS plant or a traditional gravity separation plant. What's worthwhile to notice on the ore sorter, you can get them with multi-sensor functions. With that, there is a very important function, like traditionally you would sort it by color, but this one, XRT, or X-ray transmission, can also sort on atomic density. So an ore sorter works very much on how you present the material to the ore sorter, so the ore sorter can see what the material is. If you're reliant on a color basis, your ore sorter will have difficulties. But by then utilizing XRT, manganese is very heavy, a very dense product. It can see if it's not perfectly clean, if it's not perfectly presented, then you get that second grab at beneficiation through that density process. So both really are working on the density of the product. One traditional gravity separation and one is like mimicking gravity separation. Both got us to saleable grades. So we put a scoping study around that, focusing on 66er. That gave us a 10-year mine life. We were looking at putting a throughput of 4 million tonnes to produce just under 1 million tonnes, 30% grade product, gave us an MPV of 329 million over the 10 years, an IRR of 47%. Our CapEx is a little bit larger, half for the plant, considerably larger plant, the other half being for infrastructure. Of that infrastructure, there's the road access Where, if you notice, we come down Marble Bar Road onto Jigalong Road for about 90 k's to access our site. So we're looking at how we can transport the material out. We need to upgrade that road to put on what we call a ultra quad road train. It's a 200-ton gross road train carrying 150 tons of product. So there's about 35 million for that process. And the other 25 million is for a renewable power plant. We looked at what the diesel we would consume in running this process plant, and then what that. So we've looked at a wind solar proposition. We look at that for like a 5 to 6 megawatt system, around a capex of 25 million, as I said, and you'd get a payback in less than 3 years on that basis. And again, what we're looking for, why we're doing this, is developing towards that sulfate. Battery producers are looking for a CO2 greenhouse gas, basically passport for your product. So if we can then develop the very base product as a low CO2 footprint, as we go into the sulfate, we'll continue to do that. So this is your SIL 616. We picked this up as part of our IPO process. It was really drilled out by Hannon's Reward in 2015, 2016. They gave us great opportunity. They did lots of drilling, gave us lots of great data. We did a technical review and put a resource over it pretty quickly of about 58 million tonnes. So onto manganese market. Manganese market is pretty much dominated by steel. What we're looking at producing is a concentrate that will feed into silica manganese. Silica manganese is a form of construction, or goes into construction steel like rebar, construction type forms. So again, we make a product that can fit into that market, but then also take that concentrate and feed it into the sulfate over there. Worth noting that the manganese by consumption total market is about 20 million tonnes of contained manganese. That is 100% manganese. So when you put that out into ore terms, that's about 55, 60 million tonnes of ore. The really exciting part is, the sulfate part. And the way to demonstrate the potential for manganese in the sulfate part is this simple diagram that we've got here. In the in the battery, about 33% of the costs are cathode. In the cathode, it's basically raw materials. If you look at the bar on the right, in this example, are NMC 622, M being for manganese. So you got 54% by weight by nickel, 18% by weight by cobalt, 11% lithium, and 17% manganese. If you look at by cost, though, in 2022, cobalt was 21%, nickel 23%, lithium on the price rise, now 56%, manganese less than 2%. If you go back to 2019, manganese stays at the same sort of factor. So what companies are looking at is how to increase manganese, decrease nickel and cobalt, and that is a real opportunity for manganese. Oops, actually, I'll go back. And so on that, we have started sulfate test work. We've demonstrated that our product is amenable to leaching in SO2. We've got a good generation of heat from that reaction and a high manganese solubility in that process. For us, the next stage is really moving on to the impurity step removal. High purity manganese sulfate, as the name suggests, is very high pure, very low in other elements, less than 5 parts per million typically. As mentioned, we want to do everything goes from an ESG perspective as we develop. We are about 12 k's away from the community of Jigalong. Did I do that? Should I just go back? I can keep going. I can go there. So when we do any work, we stay in Jigalong. The house that you saw briefly pictured is a house that we live in. We acquire food and all sorts of sources from Jigalong. We really look at how we can put money back into that community and develop that community. And I think it's the most important part of the project is how not only we can succeed, that we can develop the community at the same time. To recap. Okay, no, that's all right. Well, look, I know afternoon tea is in front of us. So to recap, massive resource, massive growth in resource since we've been going like 350% growth. We've done the met test work on the concentrate. We're developing the met test work on the sulfate. We've done a scoping study that proves the concentrate's a viable option. we can prove that we can produce a concentrate that's saleable. Oh, and thank you. Oh, look, actually, how can I pick up the board? Yeah, just at the board will be good. That's it, perfect. So, okay, so forget about the summary. Let's go back to the board. So Evan Cranston, well-known entrepreneur in the mining sector, combined with Ash Patterson, a really good, strong corporate focus. We're a little bit different. We've got guys with serious manganese experience. I've been involved in manganese for like 20 years, principally on the sales and marketing side in steel. So know that sector really well and starting to learn the battery sector. Wei Li, our CFO, through his family association in China, they have an EMM and EMD plant. That's electrolytic manganese metal, electrolytic manganese dioxide, which principally goes into batteries. He has a really strong battery knowledge there. So between the two of us, we've pretty much got both key markets covered. And then we brought on Brett Grosvenor recently, ex-Primero, to help us get us through this development phase of our project. We've got 67.5 million shares on issue. Great structure to grow as we go. Key shareholders, Tolga is our largest single shareholder. Board's got just over 7%. Top 20's got 51%. We're well funded at the moment. We forgot to put cash on this. We just did a raise. We raised a total of 3.5 million recently, about 3 weeks ago. Split into 2 tranches, 2.6 3 weeks ago, and another 900,000 coming up towards the end of October once it goes to shareholder approval. No. Now we can go back to summary. So like I said, massive growth, well advanced. We've got a really busy timeline. Now that we're fully funded again, or well funded, we've started environmental work. The idea being, as we progress, we want to have all our environmental processes in play, like our permitting processes in play, so that when we hit the green button to go, we are well positioned. So, we've had botanists on site doing the flora and vegetation. We've got subterranean fauna experts on site at the moment. We've got more fauna experts coming in the next few weeks. I think that's it. I have. No, I'm good. Yeah.
Anyone got any questions for Peter? You have a question?
Microphone. Microphone. Use the microphone.
Oh, excuse me. My mum with 4 kids and they can hear everything. My apologies to everyone. Has anyone got a question you'd like to ask? Anyone at all? No? You can go, they can come have a chat with you, Peter Allen, outside. Would that be okay? You were very much graced under pressure there, so thank you so much, and well done to the team for helping us out the back there. That's never happened to us before, so at least it happened with you. Have you got multiple children at home?
I do.
I thought so. How many?
3.
Oh, you're an
And
under.
I'm starting to feel like I have an IT black thumb. Everywhere I go, IT issues follow. So I'll just step back and let it be.
We'll just put you on last then. Is that okay? Who's your, well, actually, we won't even bother to ask you who your tip is because.
Look, my dad's a Western Bulldog supporter.
Yeah.
So we really don't care what's happening this weekend.
Another one. Good on you, mate. Thanks, Peter Allen. Thanks, Peter. So we will take a break. I'm going to shorten it by 5 minutes so that we don't waste any of that special bar tab time that Stewie's putting on for us after the conference today. We've got 6 more presentations, and the last one is the man that I know you all want to hear, the great Eddie from Argonaut. So looking forward to having your company for the rest of the afternoon. If you do need to go, understand completely. Remember that all of the presentations will be available on the Vertical Events website, up on our YouTube site if you need. Otherwise, just click onto the different companies because they also put them in the presentation section up the top you'll find in the banner. Okay, thanks everyone. I'll ring the bell in 15 minutes.